Okay, so let's dive right in. We're looking at Bitcoin's on-chain health today. And really, we're trying to answer one big question.
Is this real?
Exactly. Is the current accumulation just, speculative froth? Or is this the foundation for something more sustainable?
And the sources we've looked at are, well, they're pretty clear on this.
They seem to be. They're all pointing to what they call a structural accumulation phase.
Yeah.
It sounds healthy, but how does the data actually prove the market isn't just, overheating?
Well, first thing is that any healthy market needs a cleanse, a reset. And that's exactly what we saw with the recent price action,
A shakeout.
a classic shakeout. And the key metric here is the spend output profit ratio, or SOPR.
Right.
We just saw a dip and then stay below 1. And that's the telltale sign.
Oh, what does that tell us?
An SOPR under 1 is the signature of capitulation. It means the short-term holders, the tourists, they sold at a loss.
So they panicked.
They panicked. And they transferred those coins at a discount to the long-term holders. That whole process prevents the kind of runaway speculation you see in a real bubble.
Okay, so the panic sellers are flushed out. The market's reset, which means the next big question is, how much of the supply is now actually locked up by these high conviction holders?
An enormous amount. We're talking about approximately 14.1 million Bitcoin that haven't moved in over 155 days.
Wow, 14.1 million.
And that's reinforced by the 1Y plus HODL wave, which is sitting at 58.4%.
Yeah.
So the vast majority of supply is just illiquid. It's not for sale.
And who's holding it? Is it just the big funds?
That's the interesting part. It's really driven by the smaller guys, the shrimps and crabs.
People holding between, 0 and 10 BTC?
Exactly. They're often less reactive to macro news, and that just adds this deep layer of stability across the whole network.
That makes sense. But what about the really big entities, the whales? I mean, we saw them distributing earlier this year. Has that pressure actually gone away?
It's receded dramatically. We can see that in the CoinDay's destroyed indicator, the CDD. The old dormant coins aren't waking up to be sold like they were.
So the whales are quiet for now.
For now. And just as important, the network itself is secure. The hash ribbons show zero sign of minor capitulation. They are being forced to sell assets to keep the lights on.
Okay, so if we zoom out to the big picture, this all seems sustainable. But how do we check for, euphoria? How do we know we're not in a bubble?
For that, we use the MVRVZ score. It basically compares the current market price to what everyone, on average, paid for their coins.
And what's the verdict there?
It's a very neutral 1.1. I mean, that's squarely in the fair value zone.
How does that compare to previous tops?
It's not even in the same ballpark. Historically, major market tops happen when that score gets above 5.0. So this just shows how much room there is for real appreciation.
Okay, so MVRV is neutral. What about something like the RSI, the Relative Strength Index? Does that show any hidden pressure?
Nope, that's neutral too. It's sitting at 53.38.
Which means?
It means the price action is steady, it's sustainable. You'd see excessive buying pressure, that speculative frenzy if the RSI was like above 70.
Right.
This is just calm, steady accumulation.
So to put it all together, what does this all really mean?
It means you have a market that's being built on conviction, not just hype.
Right.
The liquid supply is being restricted, the selling pressure from big players has faded, and all the valuation metrics are neutral. It's a fundamentally bullish diagnosis for continued growth.
So that leaves a pretty important question for you, the listener, to think about.
Really important one. If 14.1 million Bitcoin are functionally locked away by people who refuse to sell, what happens to the price when the tiny bit of remaining supply meets sustained demand from everyone else?